that if I have a company that's going to grow 30% for the next 5 years, and it's currently priced with a price-to-earnings ratio less than 8, so you have growth equals 30%, and PE is less than 8. And if growth is maintained for the next 5 years, so basically you're looking for a company that no matter what the stock market says it's going to do, it keeps growing. And I mean, even if you're paying like a PE of 20, and you can guarantee this rate, then over the next 5 years, your revenues and earnings will more than double, and you'll probably at least double your money, because eventually, more people will find out about this company. They'll find out that the growth is predictable and reliable, and they want to own it. So your question was, where do I get my list? I initially started with the FSB 100, so you have the Fortune Small Business 100, and then you've got like, Fortune comes out with all sorts of lists, and so does Newsweek, and I'd go through magazines and just pull stocks out of the list and write them down and look at them real quickly. And when I was doing that, I was actually downloading all the data and calculating the growth rate and learning about the industries and reading portions of the reports. But now what I do is I sort through people almost. I find people online that have good ideas or that have ideas similar to mine, and I evaluate their ideas. And if they have good ideas, then I continue following them. And what that does is, instead of having to sort through 1,000 companies to get 5 good ones, I sort through like 50, and I find 2 or 3 good ones. Because people who have the same mental framework as you do eventually will come across other companies. So it's kind of like a easier way to sort through a lot of companies, because you have other people doing your work. It's kind of like outsourcing the really hard part and just evaluating their ideas, and then you can help them out too. And you had a question.
Yeah, could you go through, like, you bought China Medical today?
Yeah.
Pull their chart up and
their chart,
explain what you saw.
for some of these China ones, 317, who's that? All right, this one wouldn't be what I would consider a chart play. This one is more of a, you have to know what's going on. They have this RATS feasibility report, which I think has, in the long run, a lot of opportunity as far as growth and making money. Their financials this last quarter sucked, so the price-to-earnings ratio doesn't look as good as it would. But the 4-year trends, you have the standard growth, and still with a growth like that, you're expecting at least a price-to-earnings ratio of 8. Or I do, just rules of thumb. And you factor that in with understanding what RATS does and understanding the potential that they have. And I was a buyer, or I was willing to be a buyer above $2, and now that's at $1.60. Might as well. But I mean, as far as a typical chart idea, China Finance would be one, if it loads. But yeah, I mean, that's just an easy way to go through and try to find bottom-of-the-barrel companies, especially in a market crash. Because you'll have companies like Bank of America. It was dropping. Nick Richardson said that he's a fellow colleague of mine. It bottomed around like $4.60. I don't really remember. And it was trading around 20. And then $4.60. If you have this terrible chart, it means that in the past people thought it was worth more. Right now they're panicking, and then it's up to you to figure out in the future if it is worth more or not, and how confident you are in that. But like, this is a more of a chart that would catch my attention. It was trading as high as $6, and now it's at 20 cents. Then you go through and it's selling at less than book value. The reason it's so cheap right now is because they really didn't have any business to do last year, because how do you work with small Chinese companies that are kind of working to get public if there really is no market for those type of companies? But I feel like going forward, there's going to be more interest in those type of companies, so they're going to have more business. But yeah, that's my ideal chart. Down a bunch. And then you look through the fundamentals. And the fundamentals aren't always in the numbers, like the revenues and the net income and the earnings. There's a lot more to say about understanding the industry, understanding the cycles, understanding you know, where the headwinds are coming from, how they make decisions, what the immediate and long-term future looks like. If the long-term future looks good and the immediate future looks bad, will they be able to weather it? You know, how do they work on contracts versus how does their competition negotiate contracts? Is there room for negotiation? Do the people they're selling to have more negotiating power than they do, or is there so much demand that they can set their price? There's all sorts of things that you need to take into account, but most of it is just assimilating or collecting so much information about the market as a whole that you kind of get a feel for where things are headed. Like right now, I think natural gas doesn't really have much lower to go either. Even though that they've got a bunch more reserves to the point where it's a feasible energy alternative compared to oil. But I don't think that I don't think that they can produce it at less than $2. So it could go down lower because maybe there's a hedge fund liquidation sale. I love those because you have companies just getting murdered. Like this is a company that met my criteria. Maybe I'm famous for this company, I don't know. But anyway, it went from $20 to 30 cents. And I looked at the fundamentals, it was growing. It was really, really cheap, obviously at 30 cents. Like I think the forward PE that I calculated was 1/4. So the potential upside was over 1,000%. I've already made over 1,000% on it. So when people are panicking, and they still kind of are, I mean, it should still double. But when people are panicking, what was it, like down 98%? Like you step in, you look to see if they're still growing, if they're still a viable company. And things were going great. They had just gotten rid of a business unit that, senior living. And, I think they're still ready to go. So you look for situations like this where everybody is panicking and you do your analysis and you find out that things are going great. And then you buy. And this, I don't know why it was sold down that far. I've listened to a couple of the conference calls where you have what I would consider to be, or what appeared to be fairly large investors, not really sure what's happening. And when you aren't sure what's happening, you're more likely to sell something that looks like this because that doesn't give you a good feeling. You feel like it's going bankrupt. But I was sure that wasn't what's up.
So last week you talked about Archite Capital or something.
Anthracite.
Anthracite Capital, HR. What did you see in that?
Yeah, Mazen does not like that one.
What?
Mazen does not like anthracite. What I see in this company, I like the chart. It's at 85 cents now. I wrote an article when I was around $1. I actually wrote it like 5 or 6 days before it was $1, and I was buying around like 70 cents. But what do I like about this company? Based on what I've seen, I believe it has around $50 million in free cash flow, and it's currently valued at $70 million. So you have this company that's writing off a lot of its assets because the market is panicking, especially in commercial real estate. I think the book value is around, it's got to be above $4. So upside to book value is 400%. Upside to the chart, the chart looks good. Everyone's been panicking. They're back, or they're kind of they work with BlackRock. So BlackRock's kind of, maybe it's just my my wildest dream, but BlackRock comes in and saves the day. But it seems like nobody likes them except for me. And eventually, I would anticipate that once people, stop panicking, and I'm confident that they'll make it through this, and things will turn around. But that's just me. And if they were to liquidate right now, I think that they're worth more than their current stock price. And that's kind of how I minimize my downside risk. But there are other companies out there, like you have companies that are really in trouble, like Government Motors back in the day. Or there were a couple, Ambac Financial. I don't know if they survived or not. Oh, they probably did. I don't know, but there were a lot of companies that, I think that this company has a negative book value where, they've lost so much money and they continue to lose money. If you just set the goal at